Ready to unravel today's stock market chaos? Stocks slid hard ahead of the Fed's big decision, the tech sector wobbled before Nvidia's blockbuster event, and gold soared to a record high. Find out how it all hit our portfolio. Plus, check out how our strategic test funds held up and snag today's game-changing tip to sidestep the hidden risks that could be crushing your investments. Tune in to stay ahead. For today's market update, the market was red across the board, with the S&P 500 being down 1.07%, the Dow being down 0.62%, the Nasdaq Composite down 1.71%, and the New York Stock Exchange was down 0.38%. So not a great day across the board. The one bright spot was gold, and we'll talk about that in just a second. In terms of today's major events, stocks slid ahead of the Fed's decision. Wall Street saw a dip today as investors braced for the Federal Reserve's latest interest rate decision, which is expected tomorrow. Uncertainty about whether the Fed will hold rates steady at 4.25 to 4.5% or signal more cuts in 2025 is what's keeping traders on edge. The tech sector wobbles before Nvidia's big event. Nvidia's stock slipped about 5% ahead of their CEO's keynote speech today at the GTC. Investors are eager for updates on the Blackwell Ultra chip and AI innovations, but broader tech sector fears spurred by tariff talks have dampened the mood. Gold hit a record high today with tariff uncertainty and Fed anticipation swirling. Investors are looking for a safe haven, and it's driving gold prices to new heights. Analysts are wondering just how high it'll go. All right, so taking a look, the portfolio ended lower today, about 2.5%, with our biggest loss being Reddit, which was down about 12% today, and then Tesla was down about another 5%. If there was any bright spot in our portfolio today, it was Bright Springs Health Services that had a modest 1.5% gain. So while we did make a nice gain on the S&P 500 last week, it's starting to catch back up on us. So hopefully we get some positive news from the Fed this week and Trump cools it a little bit on some of these tariff discussions. I think if that can happen, then we're positioned pretty well, but that also depends on how things shake out with a lot of these Tesla haters. I'm honestly kind of surprised, but not really, that the one man that's actually done more to save this planet and progress us to a sustainable future is the one being gutted by the very people to claim that they support those causes. Whatever. Don't try to figure this out. You're just going to make your brain hurt. Getting into our strategy recap, this week's top performing strategy so far is Trainer's Measure. Alpha was on here yesterday, but it's been also replaced by Sharp's Measure, you can see is on here. And for the most part, these portfolios feature a smaller number of stocks, either 12 or under. And it's not surprising to see the return of Trainer's Measure, since it's typically a metric leveraged during times of greater volatility. And with uncertainty surrounding the Fed's decision, I think investors are just trying to position themselves with assets that will do well during volatile times in case the Fed decides to keep rates the same. Now, if they do lower rates, that could spur growth, but they're trying to help keep inflation in check, so it's possible that they announce no change. Today, for our strategy recap, we're discussing alpha, and alpha is really the metric that helps you understand the portion of an asset's return that is produced by the asset itself and not the market. It's the return unique to the asset, and there are actually several different ways that you can calculate it, and the one that I use is shown here. Now, alpha can be a good measure for identifying stocks that are performing well during periods of growth and economic expansion, and stocks showing good alphas over 90 days or 1 year tend to be where you want to look based on how our testing shows. But let's take a look and see how the strategies actually performed last week. So for last week, alpha ended up being a pretty good strategy with portfolios with 5 assets leading the way. What's interesting to me is that usually alpha portfolios with a short-term view tend to do a little bit better, meaning portfolios with a 90-day or 1-year return histories tend to work best with alpha. But last week, the longer-term 8, 10, and 15-year histories actually did just as well. Now, if you're looking for the best performing alpha portfolio, it was the portfolio with 5 assets and then more than 5 years of history. And since the portfolio construction method is a process that's repeated by the computer, sometimes it's possible that for multiple funds, it ends up choosing the same stocks, which I think is actually what's going on here. I'll have to look into showing you the top performing portfolio so that you can actually see which assets are in there to better understand why it produced the return that it did. Now keep in mind as you review these returns, they are from portfolios that are properly optimized. So you're not going to see huge swings like you see sometimes when selecting stocks individually. Today's tip is all about asset grades. Asset grades are a concept unique to portfolio degree, and a number of years ago, I was in grad school and trying to understand how to apply all of these metrics. One day, I was working on a group project, and after we spent several hours trying to calculate some of these metrics and building an optimizer, we turned in our project and we ended up getting a pretty good grade. But what bothered me was how did we know if we were actually making the best investment that we could? When I brought up the complaint to my professor, he joked that you'd have to analyze everything traded on the market in order to know that. Then, as he went back to his lesson, I started to wonder how to make that happen. If you're interested in the full story, you can check out portfoliodegree.com, but all of that led me to create asset grades as a way to have a quick comparison for developing a better understanding of whether or not you're selecting a good investment and potentially the best investment that you can make. That way, if you want to invest, say, for example, in a chemical company, and you see that the one you're interested in has a grade of a B+, then when you're reviewing the industry, maybe you find another one that has a grade with an A, and you end up researching that stock and ultimately selecting a better investment. And I think we can all agree that's really why we're here, is to find out how to select the best assets that can make us the most money in a safe and secure way. Well, that's it for today's episode. Thank you for being here, and until next time, I'm Matt Franklin. I'll see you all back here tomorrow. Have a great night. Hey, just a friendly reminder, if you could push something below the video.